Have you ever considered investing in closed-end funds, or CEFs for short? These are investment vehicles that raise a fixed amount of capital once through an initial public offering and then list shares for trade on a stock exchange. Unlike their open-ended counterparts, CEFs trade like stocks, meaning their price can deviate significantly from their net asset value, creating unique opportunities for savvy investors. Now, you might be asking, why haven't more people jumped onto the CEF bandwagon? A big part of the reason is that CEFs can seem complicated. They have a unique structure and mechanics that can be intimidating for those unfamiliar with them. And let's face it, in a world of flashy tech stocks and cryptocurrencies, the humble CEF may not generate as much buzz. However, if you look at the performance data and charts, you'll see that CEFs have a lot to offer. For instance, the average equity CEF returned over 10% annually over the past decade, and when you consider that many CEFs pay out high dividends, the appeal becomes even clearer. CEFs can be especially attractive when they're undervalued. That's right, because CEFs trade like stocks, they can sometimes be bought for less than the value of the assets they hold. This creates an opportunity for investors to buy a dollar's worth of assets for less than $1. And who doesn't love a bargain? So, does that mean you should rush out and buy any CEF you come across? Not necessarily. Like any investment, it's crucial to do your homework and choose wisely. But we're here to help with that. In fact, we've found a particular CEF that we believe is poised for success in 2024. CEFs can be a strong investment choice, especially when they're undervalued. Speaking of which, we found a particular CEF that we believe is poised for success in 2024. So, what's this secret investment we've been alluding to? Now that we've navigated the investment landscape of 2024, understood the power of high dividend investments, and discovered the appeal of closed-end funds, it's time to unveil the secret. This investment is a gem in the rough. It's currently undervalued, which means it's like a diamond waiting to be discovered, offering an excellent entry point for investors. It's a bargain buy that's set to soar, and the best part is it's not on everyone's radar just yet. One of the most attractive features of this investment is its high dividend yield. In a time where interest rates are low and returns on traditional savings methods are negligible, a high dividend yield is like a refreshing oasis in the financial desert. It's the income-boosting solution that every investor dreams of. But what makes this investment truly stand out is the fact that it's a corporate bond fund. In the world of investing, bonds are often seen as the more stable, less volatile counterpart to stocks. They offer regular income and tend to be less affected by market fluctuations, providing a safety net in uncertain times. So why a corporate bond fund? Well, it offers the best of both worlds. You have the potential for high returns from the corporate sector, coupled with the stability and regular income of bonds. It's a balance of risk and reward. And in an unpredictable economic climate, this kind of balance is invaluable. This investment isn't just a way to grow your wealth, it's also a hedge against uncertainty. It's a way to safeguard your financial future, no matter what 2024 has in store. Ready for the big reveal? This promising investment for 2024 is the Apollo Tactical Income Fund, AIF. Why do we believe that Apollo Tactical Income Fund, AIF, is your best choice for 2024? Well, there are several compelling reasons. Firstly, AIF is a closed-end fund that focuses on corporate bonds. These types of investments provide a strong hedge against the uncertainties of the economic landscape. They offer stability, which is a crucial factor for any investor, especially in a year where economic growth predictions are so varied. Secondly, AIF is currently undervalued. This means it's an excellent opportunity for investors to buy into a fund that has a high potential for growth. The undervaluation of AIF is not a reflection of its performance, but rather a result of slow investor interest in closed-end funds. This is your chance to get ahead of the curve and invest in a fund that's set to take off. Another significant factor that makes AIF a strong buy is its high dividend yield. In the world of investments, dividends are akin to a steady stream of income. AIF's high dividend yield means that it's a fund that doesn't just promise growth, but also regular returns. This combination of growth and income is what makes AIF such a compelling choice. Moreover, AIF has demonstrated strong earnings growth throughout 2023 and is poised for continued strength. This upward trajectory is part of a broader bullish pattern in the stock market, which suggests that stocks and AIF in particular are set to soar. In short, Apollo Tactical Income Fund offers stability through its focus on corporate bonds, growth through its current undervaluation, and income through its high dividend yield. All these factors combined make AIF a strong buy for 2024. But don't just take our word for it. Look at the data, study the charts, and you'll see why we believe AIF is your best choice for the coming year. Thank you for watching. Don't forget to like and subscribe to our channel for the latest videos on finance and investment. Here's to a prosperous 2024 with Apollo Tactical Income Fund.